Canberra moves to regulate cryptocurrency trading and open the door to the blockchain world. How healthy are you? Nearly 80% of Australians have long-term health conditions, and the world's biggest oil company makes a profit of $130 billion. It's Tuesday, the 22nd of March, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's one of those days with a great date, 22322.
No, okay. You know what? I'm just going to quickly take you to task on something. You are slipping because you are the one who always points out the good dates and the special dates, and you missed a big one yesterday. You missed the autumn equinox.
My father's birthday, actually. It would have been 94, the 21st of March. As a result, I slipped my mind about the autumn equinox. Was that yesterday?
It certainly was. So it's, correct me if I'm getting this wrong, where it's equal time, day and night, and then basically every day after that is now just getting increasingly depressing and dark. As you can tell, I do not like winter much. So we're heading downhill now, but soon we'll be talking. Well, you'll probably miss the spring equinox as well, and then we're on the other side.
That's right. Look, I actually don't mind the months, things like March and April, because you sleep better, it's cooler at night, you know that winter's coming. And I mean, no one really likes winter, but there's all sorts of activities around sport and things like that, which you just can't do in summer, but you can do in winter. So I'm actually looking forward to the next couple of months, Michael.
Sean Silver Lining Aylmer. We're off to a good start.
That's right.
Now, Sean, the interview today is a really interesting one. Speaking of silver, and this was not an intentional segue, but I'm going to roll with it. Manuka Resources is a gold and silver miner. Today you're speaking to Dennis Karp, the executive chairman of the company. It's ASX listed and really going through that transition between mining gold to mining silver. So a really kind of interesting position to be in. It's a great chat, so stick around for that one coming up after the show. But let's get into it, Sean, because the lead story today is actually about something that we do quite like talking about. It is about cryptocurrency and the federal government in particular. They want to make investing in cryptocurrency safer, and the plan is to boost regulation around the sector.
Yes, already 800,000 Australians have invested in cryptocurrencies, and the government has accepted it's pretty much here to stay, or more accurately, the technology behind cryptos, blockchain technology, is definitely here to stay.
Sean, before you go too much further, I think it's worthwhile probably getting a bit of a 101 on blockchain technology. And I'm asking you that, just wondering, are you the right person to be giving a 101 on blockchain technology?
It's a very fair question. Probably not, but I'll have a go. In essence, it's a system of recording information in a way that makes it really difficult or nearly impossible to change or hack or cheat the system. So it's basically like an old-fashioned ledger, like everyone has in accounting terms, a ledger, but instead it's digital and duplicated and distributed across a network of computer systems every time there's a new transaction, or at least part of it is. That makes it really, really difficult to alter. So if anyone's tampering, it's actually much easier to capture. Think of it as an extremely accurate digital ledger that can't be altered. Now, if you want the 102, the 103, even the 201 on that, you're going to have to go elsewhere, but that's the 101.
Look somewhere else. You've exhausted your knowledge on blockchain technology, but you know what? You did a good job. I followed it, so well done. Based on all of that, is it surprising then that the government is going down this path of looking at the regulation around the sector?
Not really, because given the weight of money going into cryptos from individual investors through to massive superannuation funds, the government really has little option. Now, it wants to establish a licensing framework around secondary service providers. So that's around things like exchanges and brokers and custodial services, all those people that you deal with when you're buying and selling and holding cryptos. It won't stop people losing their money if cryptos go south, but it certainly should help investors decide how to invest in cryptos and hold their digital currency. It gives just a little bit more security around all that administrative stuff.
And correct me if I'm wrong, this isn't an isolated focus just on crypto. It's actually part of a bigger look at digital assets more broadly.
That's right. The government's talking about a new Digital Services Act, which would protect consumers but also enable the development of opportunities around blockchain technology. If you have legislation around it, people know the rules and so they can develop technology using the blockchain. The theory is that because it's so secure blockchain technology actually opens the playing field to content creators well beyond the big tech companies. There was an example, in fact, yesterday of the use of blockchain technology when Qantas launched a suite of artworks as non-fungible tokens, NFTs. We've spoken about those before. Basically, it's like owning a piece of digital art, and you can do that buying a piece of Qantas memorabilia effectively.
Okay, so how are cryptos and I suppose the rest of the market then as well performing?
Well, let's start with cryptos. They've actually had a pretty good month of March. All the big ones, Bitcoin, Ether and Binance, have appreciated around 10%. Solana's up around 3%. They're the big four, those four, Bitcoin, Ether, Binance and Solana. Moving on to the general market, the S&P ASX 200 finished down 0.2% yesterday to 7,279 points. Tech stocks continued their strong run, outperforming all other sectors. Block, the owner of Afterpay, jumped 9%, easily the standout. Healthcare and industrials were among the worst performers. Michael, global markets are showing a little less volatility at the moment, with the US Federal Reserve's announcement on interest rates last week stabilising movements. It just gives some direction for what's going to happen with rates in the world's biggest economy. Also, there's just a bit of an effect of getting used to the war in Ukraine. And so we just don't have, notwithstanding the disaster that's occurring there, we don't have the shock in financial markets that we had the last few weeks.
All right. Big start to the show. We'll be back in a moment with the rest of the day's business news. Sean, evidence in the inquiry into the Star Entertainment Group was cut short yesterday, but not before, and this is pretty remarkable, not before it was told that the group's Sydney casino gave a known high roller who's being investigated by the tax office a $5 million credit in exchange for a blank cheque.
Yeah.
Extraordinary, isn't it?
It is extraordinary. It really is. The inquiry also heard that Star allowed that high roller, named Philip Dongfang Li, to pay back debts via China Union Pay debit cards, which allegedly can be used to circumvent anti-money laundering controls in China. Now, the inquiry is looking into whether the Star is fit to hold a casino licence. When we hear stories like that, you really wonder. Mr. Li appeared under compulsion. He didn't want to be there. He said he'd been offered the $5 million loan with a 30-day payback period in exchange for a blank cheque. Anyway, his evidence was actually cut short, though, after the Star's barrister said translation issues meant some evidence was unclear. That's going to be a problem as this continues. The inquiry is continuing.
Now, Sean, in Canberra yesterday, there were some tax concessions announced, and they will benefit a range of people. How's this for a range? Everyone from farmers to video gamers.
Yes, there's a bunch of smaller funding amounts being announced at the moment ahead of next week's federal budget. Farmers profiting from carbon reduction will get $100 million in tax perks. Now, the goal there is to encourage farmers to reduce carbon emissions. Think cows, Michael, think cows. Also, video game developers in Australia will get a tax offset. Obviously, it's to encourage one of the great growth sectors globally, video game makers. And the government will spend $60 million to improve the ability to recycle some plastics like bread bags and chip packets. Apparently, they're two of the hardest things to recycle. Before we move on, where do you think the biggest video game makers are?
As in which country?
Yeah, where do you think they come from?
I would say the US. And I feel like I'm walking into a trap here.
No, you're not. So the US definitely, and Tencent in China is huge. But the third one, the third country, in fact, it is home of the biggest video maker. When you hear it, you'll think, of course. But any ideas?
Israel?
No, it's a good guess. Good guess.
God.
No, it's Japan.
Oh, of course. Now I feel quite stupid actually for not having guessed that. That makes perfect sense in hindsight. As a long-term Nintendo fan, I should have guessed that one first up. So, all right, I will never make that same mistake again. And you might have just won me a pub trivia night jackpot round with that little tidbit of information. Now, Sean, there's some big spending going on in Queensland.
Yes, the Queensland government will pitch in nearly $620 million to a $1.8 billion infrastructure agreement between the feds, state and local governments. Canberra will put in just under $700 million. Projects to be funded include a Gabba Brisbane metro station and money for improving livability, innovation and waste management in the area. Of course, this will all be done in the run-up to the 2032 Olympic Games, which Brisbane is hosting. Prime Minister Scott Morrison yesterday announced the project and said the spend should create about 2,000 jobs in southeast Queensland. Really does sound like an election coming on, Michael.
Yeah, it really does. Funny that. And Sean, the new Premier of South Australia was sworn in yesterday.
Yes, Peter Malinauskas was sworn in. He immediately met with the state's police commissioner and chief health officer. Mr. Malinauskas stressed that when it came to COVID, he'd always follow health advice.
Sean, speaking of COVID, what were the numbers like yesterday?
Not great. New South Wales recorded nearly 15,000 new infections and 4 deaths, including a previously healthy 2-year-old. Victoria recorded 7,500 cases, while Tasmania recorded 1,300 new cases. Across the country, there were nearly 40,000 cases yesterday and 6 deaths. At least the fatality rate is nowhere near as high as it was pre-Omicron.
Yeah, indeed. Now, I mentioned this at the top of the show, Sean, but the Bureau of Statistics has released figures showing that almost 4 in 5 Australians have a long-term health condition and about 50% have a chronic condition. I am really surprised by that. I don't know why, but I thought we were healthier than that.
Yeah, it's pretty startling. And I must say, I went back and tried to find the definition of a chronic condition versus a long-term health condition, and that wasn't clear because I would have thought they were almost the same. Anyway, there were startling numbers all around. It was the release of the first National Health Survey from 2021. Now, that was taken obviously right in the middle of COVID. The 3 major chronic problems were mental and behavioural conditions at number 1, back problems at number 2, and arthritis. But Michael, the survey has all sorts of interesting bits and pieces. More than 1 in 5 18 to 24-year-olds have tried e-cigarettes or vaping. I'm not surprised by that. But 83% have never smoked tobacco. I mean, having a ciggy out the back used to be sort of rite of passage in my day.
No, I have never smoked a cigarette. Ever.
Is that right?
Yeah, that's right. Yep.
Wow, what 20 years did. Anyway, in fact, more than 60% of people aged 18 years and over have never smoked. So you are in the majority. And only 11% nowadays are regular smokers, but it still causes about 20,500 deaths a year, which is around 13% of all deaths. I'm going to keep going here. I just found this fascinating, this Bureau of Statistics data. 1 in 4 adults over the age of 18 years exceeded alcohol consumption guidelines, with men more likely to do so. It was about 1 in 3 men. Do you know what the alcohol guidelines are, Michael?
No, it'd be, 3 or 4 drinks a day? Maybe 5? I actually don't know. I'm taking a punt.
That's about twice it. It's basically 10 standards a week, no more than 4 on any one day. But, of course, no amount is safe. So I'm not sure what that means.
I was way off. Okay, carry on.
Mind you, moving more into your area, while 57% of Australians rate their health as excellent or very good, only 27% meet the physical activity guidelines. In all honesty, Michael, how many minutes of physical activity did you do last week?
Well, Sean, I have an Apple Watch that tries to get me to do 30 minutes of exercise a day. And if I do that, I get one of these little medals, these little badges that pop up on the phone. I don't remember the last time I won one of those badges for doing 30 minutes in a day. So very little is the answer to your question.
Well, the recommendation is that if you're between 18 and 65, you should do 5 sessions a week, which total between 2.5 and 5 hours. That's of activity. Our Safe Word partner, Adam Lang, I reckon he'd do that in a day just about. We probably hurt the averages though, Michael, you and I.
Yeah, I think Adam is kind of just helping us out. If we just kind of spread it across the two of us as a team, Fear and Greed's actually pretty healthy.
Well, we'd be in front, wouldn't we? I'd imagine. 3/4 of people aged between 18 and 64 undertook at least 2.5 hours of activity in the survey period, which is interesting. I mean, all in all, it's amazing how many people do have chronic health problems.
Yeah, I really am quite surprised by that. Now, Sean, former Labor Senator Kimberley Kitching's funeral was held yesterday, and really the lead up to her funeral and pretty much ever since her death, it has been really, really unfortunate and unpleasant, the politicking around the whole thing.
Yes, and it continued yesterday, really, how she was treated within the Labor Party. It continues to make news, and I totally agree. It's very sad. Certainly, she was given a fine send-off with the ALP well represented, most of their senior members there, and many from the coalition as well.
And Sean, just a quick one. The former CEO of Magellan Financial, Hamish Douglas, has resigned from the board.
Yeah, 6 weeks ago, he took a leave of absence running the company due to health concerns, and now he's resigned from the board. Magellan, of course, was the rockstar fund manager 12 months ago, but poor performance triggered a loss of mandates, and the group's share price is now less than a quarter of what it was a couple of years ago.
All right, moving on to overseas news, and there are plenty of efforts, Sean, to find a peaceful solution to the war in Ukraine, though nothing at the moment seems to be working.
Yes, but at least there's plenty of activity. For example, China's ambassador to Washington said Beijing would do everything it could to de-escalate the conflict. US President Joe Biden will travel to Poland on Friday this week to meet with NATO allies. Ukrainian President Volodymyr Zelensky raised the prospect of further peace talks with Russia, hosted in Jerusalem. Having said all that, Russia has given Ukrainian forces a deadline to surrender control of the besieged city port of Mariupol, the scene of some of the heaviest fighting since the invasion began.
Now, Sean, last year, everyone was talking about the Chinese property developer Evergrande Group. Yesterday, it suspended trading. What's going on?
Well, there's no reason given, but it certainly surprised investors. As you alluded to, this is a property giant that nearly defaulted last year with $300 billion in liabilities and millions of half-built homes around the country. He came back from the brink and is supposed to be restructuring. We care so much because China, a bit like Australia, is very property-based. The Chinese economy and wealth relies on a strong property sector. So if one of the biggest developers goes under, that won't be good not just for the Chinese economy, for the global economy as well, and for the Australian economy, which exports lots of iron ore that goes to infrastructure that surrounds all these buildings of homes and residential areas. So something to keep an eye on.
And last one, Sean, I mentioned this at the start of the show just because it's quite a staggering number. Saudi Arabia's state oil company made a handy profit last year.
Yes, a mere 130 billion Australian dollars, thanks to booming oil prices. That's about $17 million an hour for the oil giant Aramco. It's incredible, isn't it? It's the world's largest oil exporter, and it's benefiting from strong demand as well as the prices, of course. Now, the Saudi government owns 94% of the company, and a chunk of the money that it's making will be used to invest in industries away from fossil fuels as part of Crown Prince Mohammed bin Salam's plan to restructure the economy by 2030. But when you make so much income from oil, it's going to be very difficult to actually stop doing it.
To wean oneself off that. Yeah, extraordinary. Now, Sean, up next is the Fear and Greed Daily interview. And I mentioned this before. You're speaking to Dennis Karp, the executive chairman of ASX-listed gold and silver miner Manuka Resources.
Yes, we kind of got a 101 in mining and how it all works and how it operates and how different gold and silver is and why Manuka Resources, they operate in the west of New South Wales, why they're pushing towards silver and less so towards gold. Just a really good look under the hood of one of the smaller gold and silver players.
Yeah, it's a really interesting one. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 22nd of March, 2022. Make sure you're following the podcast. And as always, join us online on LinkedIn, Twitter, and Facebook. And remember that you can find Fear and Greed on any of your smart speakers. Just say, play the Fear and Greed podcast. I'm Michael Thompson, and that was Fear and Greed. Have a great day.